Yeah, morning Trace. Looking at Asia today in terms of equity markets, expecting Japan to fire up a little bit. We see some outperformance there. Hong Kong green on screen and a flat open expected for Asia. In terms of new flow, we've seen a pretty poor NFIB small business survey coming out of the US. The optimism fell 3.6 points to 89 and 89.5. It's the lowest level since 2013. The number of companies expecting an improvement going forward fell to the lowest levels in 48 years, and that backed up a very poor ZEW number coming out of Germany. Now, in terms of moves, what we've been seeing in terms of effects, everyone's been focused on the dollar. We've got the dollar index maintaining that 108 handle, but in terms of euro dollar, we did hit parity. Everyone was watching that like to the T. We managed to rally off that level into 10074, where we found a few sellers. You can just see that rolling over a little bit there. Across G10, we've seen some outperformance in the Aussie dollar, which hit 67.79. I'd be selling into those levels at the moment. Obviously, CPI in the US, the big one that's going to potentially drive the dollar and broad markets going forward. Markets probably expecting that top side of the consensus of 8.8 at the moment. But the petrocurrency is under pressure. Obviously, we've seen a big move down in front month crude. OPEC have given a fairly positive outlook in terms of the demand versus supply imbalance, not shared by the EIA. But generally speaking, you are seeing commodities lower. You've seen crude lower, Brent, WTI. We've got WTI looking at last week's low, 95.10. Break of that takes us into the 200-day moving average. Gold looks pretty ill at the moment. You've seen that trade 1725 lows. Can that get down to 1700? It's trending lower at the moment. We're seeing copper down 5%. Ags are weak. Soybeans, wheat, all under pressure at the moment. So this is a demand story. It's that recession fears kicking in once again. We've seen bond buyers coming through. You can see yields across the curve lower. Now that has been offset by a very poor bond auction, $33 billion of 10-year reopenings coming through. That tailed by 2 points or so, but generally speaking, yields have moved up on the back of that poor auction. But we are seeing good buyers playing through as that recession fears and pre-positioning ahead of CPI came in. We are seeing weakness across equities. We're seeing materials outperform, but energy and tech under a bit of pressure there as well. And that's something we are watching as we go into Asia. So CPI, the key focus, and it's about pre-positioning for that today.